Thanks. I mean, I'll leave Matthew give some color on that, but I think the first thing is just how important it is that we have full joint venture endorsement to move forward to the drilling of Kertang. It'll be drilled, in due course, and it's about when it's drilled in the sequencing of the wells that INPEX have to drill. INPEX have to drill other wells in other blocks, so it's about getting the sequencing of the well, the Kertang well, in that sequence right. What's great for us is that Kertang will be drilled. I think there's a lot of sensitivity over a detailed work needs to be done over the detailed location. We've talked about 2 possible locations, but there could be more, and there's different objectives that need to be targeted. So I think there's a lot of thought and work, and INPEX are doing this now with the partnership on drilling the well in the absolute right location, not too far down dip, not too far up dip, making sure it targets all the horizons. But maybe Matthew, give a bit more color or context on that?
Thanks.
What I've missed?
No, I think you hit all the points. I think what's great is that INPEX as the operator, they're great because they've gone back to the JV and sought all JV's thoughts and ideas on where to pick the best location. It's not straightforward. I mean, we need to kind of hit all the key targets, hit the cycle 1, hit the cycle 2, cycle 3, and maybe even potentially hit the shallow amplitudes as well in cycle 5, cycle 7 to that place. But what's important is that they convert all the with the JV. They talk to all the JV. The 2 locations has been mentioned. I'm sure there's still optimization to be done.
There's some fine tuning possible of those locations.
But ideally, we're going to go quite crystal so that we don't miss any of these potential pay zones in the cycle 1, cycle 2, and cycle 3, and also to do enough of the cycle 1 section so that we know for sure how much net pay we have within the cycle 1 itself.
That's something that really resonates with me, because we tell this story so often, and we tell it internally in the joint venture so often, and we convince ourselves that these models are right, but of course they're just models. They're ideas of what it is, so we will get surprises. So we have to make sure that we drill the well deep enough so we evaluate the structure properly.
Correct. Make sure that all the well, not only drill the well, but actually make enough preparations for the evaluation of the well eventually when a success case. DSTs, cores, whatnot, all that needs to be considered. Indeed, by the operator and also by the JV. Well, the operator will decide, but in our opinions, we would like to have it tested for sure. Yes. Well, I mean, this cycle 1 is quite new in this area. It's been tested before, true, but not in the commercial volumes. We are a little bit deeper here compared to all the previous cycle 1 penetrations. The test will tell us the flow rates, how good quality the rocks are in terms of delivering volumes into the borehole. That will help us in the eventual development plan to size up right the development plan for us to make commercial of the project in a success case. I think there's definitely synergies in that whole bigger idea. I mean, Total is a big player. 4 TCF is not a small number. Eventually, INPEX and Total and Petronas, of course, will be involved in the bigger development plan of the entire North Luconia. If everything comes in success case, if we do the 9 TCF, wow, I'm sure the operators can come together and figure out a massive development plan to commercialize this gas.
And what's great, just to add to that, what's great is also the activity in the whole area. Not only the Total development, but other developments in the area, and also new players coming in. We mentioned Total coming in, but also we know that Eni will be coming in, the Italians, with a new joint venture with Petronas Carigali. So an awful lot of activity in Sarawak, which is really very gratifying to see.
For sure.
It's all linked to column. So how much column there is. So the key risk on the structure is the integrity of the trap and whether the trap can retain a column of gas of several hundred meters or up to a kilometer, as Matthew was alluding to. And if we have the upside cases, then we'll have the upside numbers. So a large column retained by the trap at the top will give us those very large volumes. Because it's such a large area, because the rock is such good quality, we know it's good quality from the offset wells in the cycle 1 reservoirs. If the rock is so good quality and the area is so large, the numbers end up being very large. And so the upside numbers are even larger than the 9 TCF that we presented before. It is possible in a range of outcomes that we get to those super upside numbers.
Can I just add on that? I mean, we talked about the 3 analogs earlier, the Kasawari, the Langlaba, and the Majoram. It's important, I didn't mention it earlier, but these discoveries, these fields actually hold up to 900 meters of column. So it's not impossible. But in the bigger scheme of things, we have to deal with uncertainties, right? So in the high side, we could go up to 1 kilometers. But in the bigger scheme of things, we come out with a mean number, which brings us to about 9 TCF.
What's great is the columns that we know exist from those fields, and we know that we have very good clastic reservoirs from the offset wells that sit to the east of us that were drilled by Shell and Newfield and others. So we have potential for good reservoir, and we have potential for very significant
Large
columns.
Exactly.
And we have a very large structure. So it kind of all fits together in this one place.
The puzzles all fit.
It all fits in this place. It just needs to be drilled, Matthew.
Exactly.
Yeah.
Absolutely, yes. I think what I'm seeing that's different this time round is, we're focused on one country at the moment. We have been looking elsewhere in the region. It's no secret. We've looked at Thailand, Vietnam. We've been to Brunei. We look at Indonesia. So we cast a wide eye, I would say. Difficult to compete with Malaysia, though, particularly for data access and speed. So what's different this time around is everything is going so much faster in Malaysia. The time from the initial conversations to signing a new license are very short. And it's just not what we see elsewhere in Southeast Asia. You've got to have a long time fuse. And so, that's not to say there aren't opportunities that are attractive out there. They could be, but you've got to be prepared to bat away for a year or two before you can land something. And when you're small and you've got a very narrow portfolio like us, you really don't have the luxury of that much time. As we get bigger, of course, we could do some of that and have these things mature in their own sweet time, and we're going to be less sensitive to it. But right now, Malaysia is quick cycle. We can approach the regulator with ideas, and they are releasing a lot more opportunities on a very regular basis. So there's just a lot more going on. I think the other great thing is the barriers to entry, and we've said it a number of times now, are quite high in Malaysia. It's not for everybody. Not everyone can do this. We kind of have we've got an in here that many other smaller companies can't get. And so we need to take advantage of that. I think within Malaysia itself, I think what we're learning on Temaris is fantastic, and we can apply it elsewhere in that part of the basin. My gut is we have a foothold there in the southern edge of the margin of the Malay Basin, which we're learning a huge amount, maybe more than anyone else. Our knowledge levels are going to be the best in the industry quite soon about that play. If people want to get after it, they'll have to come to us. And so can we leverage that? So doing more around there, yes, big tick. Sarawak, it's harder over there because it's a big boy territory. These are big companies with huge balance sheets, with massive G2G influence. That's tough for us to play, but it doesn't mean we can't. We have a foothold. Maybe there's more to do. And then I think, I like the idea of 3 things. I don't know why, I just do. And a third would be good for us. My instinct just feels that, a third would just help. Whether that's at the northern end of the Malay Basin, maybe, or one of these other basins, we look at Sabah occasionally. My waters tell me.
Well, we have in Sarawak, typically there are 2 different types of reservoirs, by and large. You have the carbonates, which are basically your limestones, your corals that you see if you go diving in the sea. And your clastics, in this case here, is basically the sands you see as you walk along the beach. It's not exactly like for like, but the closest analogy is like you get to feel the sand in your feet. Those are the reservoirs that the wells will be drilling through. The only difference is that these reservoirs will be gas-filled.
So the gaps between the sands will be full of gas?
Exactly, yep.
All retained by the muds and the shales above that will keep the column below that trap.
Yes, and hopefully large column.
It could be several hundred meters.
Exactly, yep.
Yeah.
Yep.
Skyscraper size.
Skyscraper size.
Skyscraper size,
yeah.
Indeed.
Well, the Petronas columns are 450 meters, so 900 meter column, 2 Petronas towers, like we said. I think realistically, I think it's early days, and I think we need to do more work. What I'd really like seeing is that we have a portfolio of prospects emerging across the whole of the block in different plays. So ideally, if you look towards a future drilling program, if you could actually drill to ensure success, drill as many different prospects or different plays as possible, that would be great. And of course, we have the established plays in Tembakau. So those plays, particularly the I-80, when we see them extend onto the block to the west and to the northwest, those inherently have lower risk because, and the auditors have told us that, because they are already established in Tembakau. What's great from the work that Matthew's done, and I'll let him talk about it in a second, but the shallower prospects of Alamanda and others are really very extensive and a very exciting play, and we know they're sandy because we see them in other wells where they're sandy at that level. So I think the portfolio is what I find quite exciting, and then to ensure success is drilling out different elements of the portfolio. I think that would be great.
No, I think,
what's your sense on Temaris, Matthew?
I think it is early days, but again, what's beautiful about the portfolio is that we have options, right? So
It's all about optionality,
all
right?
optionalities. You can go for a single play in a single well, or you can go for multiple plays in a single well. The preference, of course, if you can hit all the different targets or different plays in a single well to maximize the potential value, that would be the ideal scenarios. But more work needs to be done just to work out these prospects, to de-risk them, to deal with the uncertainties surrounding these prospects. We talked about the incised channels that potentially could trap Alamanda, for example. That just needs to be worked out a little bit more. We're doing additional work on the seismic, on the geological model, so that we can understand it better to help us reduce the uncertainties when we eventually drill it.
You know what the technical session we had yesterday, what I really enjoyed about that and the workshop between all of us was coming up with locations and areas that could be drilled where you actually stack up multiple objectives.
Exactly.
Where we get the E sand, and we found a location possibly where there was an I-80 sand that could be drilled together eventually, and other sands, and we were even postulating about deeper targets.
Exactly.
So it was quite interesting, the workshop maturing an idea for a best possible location eventually when we do look towards drilling.
Exactly. I mean, we've come a long way in 4 months since we signed the PSC, and we've already have quite a healthy portfolio. And I'm sure because of the quality of the assets we have, there will be more that will come out eventually to enrich this portfolio with given time. So in an ideal scenario, we can test again all these different plays that we've seen in our acreage. That would be the best case. But we just need more time.
Multitude of plays is a great option, right? It's all about optionality.
Exactly. So the key risk here is actually the traps, right? What I mean by traps is actually what forms the container itself, right? Let's take Alamanda for example. It is kind of flat. Essentially, gas floats. If you put gas in water, gas actually goes up and basically floats above the water. So without gas, basically a lot of these clastic sands or these kind of beach sands, you want to call it for the as an analog, they are water bearing unless you have gas charging into the pore space of the sands. And so if that's the case, then you need to also have that container, that trap, in order to store that gas. So Alamanda obviously has, we think there's a top seal sitting on Alamanda. Essentially what's on the flanks of it, right? At the moment the model we have is these incised channels filled with shells that's encasing this trap for Alamanda. And the same goes for the rest of the stratigraphic traps, stratigraphic prospects we have. The amplitude tells us there's a good indication of gas in these reservoirs. We just need more time to work out the trap for all the stratigraphic prospects. Well, we're trying the sweet spots, right? Find the well when we drill eventually is around that size. We're talking about 20 square Ks, 32 SKs. That's the size of the prospect we have. We need to find the best spot on a seismic that we can put a well that size into the ground. So we need to find the best sweet spot. Sweet spots be defined with the spot with the best quality reservoirs, best saturations, best amount of gas within this pore space of the sands, and also in a spot where we can properly evaluate the entire prospect.
Really interesting to think about. These wells are really, if we were to drill exploration wells on this license, exploration wells are really low cost. So wells are probably in the range of $8 to $10 million, at that kind of cost for exploration well drilling. This is not deep drilling. These wells will go to 800, 900, 1,000 meters. So really quite low cost drilling in this area.
And are these floating rigs, or are they?
No, these are all jack-up rigs because the water depths are really shallow. These are water depths of 70 meters or so around here. So it's all jack-up rig territory, so low-cost drilling. And what's great about operating in Malaysia is there are so many available because they're operating in all the different fields. So there are rigs that we could use opportunistically in due course.
Yeah, no, it's a very, very good point, Nick. And again, a big difference to what we saw before. If I take my shareholder hat off for a second and just think about the company and the longevity of the company and the stability of the company, we need cash flow. That's what we need. You know, we can generate revenue by farming out and all these things, but it's you know, it's hard. It's uncertain. So, you know, that's not a great life for an explorer, which is already full of risk. This business is already full of risk, so you're just adding more risk to it. So stability from cash flow would be phenomenal. Yes, there are opportunities there. We've looked at a number of them. You know, we've made offers. The problem is that the pricing of assets in the market and what we can negotiate, you know, to us looks like a reasonable deal. But when you put it up against the cost of capital that we have as a small E&P, which is huge, financing that becomes so challenging. And so if I put my shareholders' hat back on, it actually doesn't seem to work so well. You know, we're looking at a cost of equity, you know, versus what we'd be having to pay in terms of to acquire a producing asset, even if we saw upside or we saw a long, stable, reliable cash flow stream. Is a very, very difficult equation. It can work on occasion. It can. You know, we've seen it in Southeast Asia, but it's very rare. So yes, we would want to do that, absolutely, but they're like, you know, hen's teeth, those kind of deals. So we're very much alert to it.